I'm happy to present the actual situation of MS Industrie AG and the outlook for the coming years. Let me jump into my presentation. MS Industrie AG, the basis of MS Industrie AG was founded in 1965 with the foundation of a company called Maschinenfabrik Spaichingen, a typical German small machine builder at that time. Over the years, from a small machine builder, the company developed to become a supplier of the powertrain industry. First in '84 with an order from Daimler to be active as an extended workbench for Daimler. And since then, the company focused on machining very special and heavy-duty metal parts of various types of metals: aluminum, steel, forged parts, die-casted parts. In 1994, then the company entered into the production of rocker arms and valve bridges for MAN and Mercedes-Benz. In 2016, due to the growth, the company moved into a completely new manufacturing site, which we will see in a minute. And in 2023, again, due to further organic growth, we extended this manufacturing site, and in the same year, we founded a small company in the US, in the United States, in North Carolina, where we kicked off the manufacturing by the end of this year, and will enter into the US market, beginning with covering our US clients from beginning of next year. So this is the main manufacturing site located in Trossingen, Schura, which is a small village, approximately one hour south of Stuttgart, driving the motorway down to Lake Constance. It's very close to the motorway. And as I said, the whole building was newly constructed in 2016, and the extension of the hall in 2023. As you can see, we have a huge space used by photovoltaic systems for our own electricity production. I will come to that later on. Altogether, more than 22,000 square meters. It's the biggest single hall in that region, and it's also the biggest industrial photovoltaic plant in that region. Here, a small picture of the new site in the United States. It's a smaller location with 1,600 square meters. We will build up to 25, 30 employees step by step over there, beginning with the delivery to our US clients, which we have already in our portfolio. Which sectors do we serve? The history, as you have seen, and still the main customer base is the truck industry in Europe, but it's also the truck industry which is located in Asia, in Japan, and as you can see, also in the United States. At the very beginning, the company was focused 100% on the truck in the truck sector. Over the past years, we step by step diversified successfully, and as of today, we are almost 70% truck-based. There we are talking about heavy trucks only, and the rest has been diversified into sectors like the construction machines, like alternative drives, alternative engines, and also certain parts for new electric vehicle in the passenger car industry. Since the truck industry is quite significant to us, I just wanted to highlight that the two biggest platforms for heavy trucks worldwide are the Daimler Truck Group and the Traton Group, with Volkswagen, Scania, MAN, and so on. And those two groups are served by us as a single source supplier for valve train systems for the combustion engines, heavy trucks, heavier than 16 tons. And in addition to that, you can see a couple of logos and brands of other companies which we are serving with our know-how and our products. The combustion engine sector is developing quite impressively, because the classical diesel engine, which is used on road in almost 99% of the trucks as of today, we will see and we experience that the machine builders and the truck builders, and especially the builders of motors, are more and more testing the same combustion engines to be driven with pure H2. This seems to work quite well, especially for heavy-duty applications such as construction engines. So we will see step by step a transformation. So we use the same combustion engines, and these will be driven not only by diesel, but also by gas, by biogas, by mixtures, by hydrogen, and prospectively also by e-fuels. I'm always talking about heavy-duty applications. The products divide into three groups. We are machining and assembling complete valve train systems, as you can see on the top of this page. We are manufacturing very sophisticated housings for engines, and we are machining and assembling special components such as rocker arms or axles to be machined in with very small, very thin tolerances. We have more than 180 manufacturing machines in the location Trossing and Schura. The competences and the capacities are spread. As you can see, the machining part is the most important part, but followed by assembly, by certain drilling processes, grinding, turning, and the surface treatment of these parts is also very important. Here you can see just an example. The presentation is also used for our target customers, so you can see a bit how it works in the metal shop down in the manufacturing site. We have automated systems to load and machine automatically. We have 5-axis machines which can work the parts with just one clamping, one fixing of the part without changing it. The traceability of the single work steps is important and will be much more important in the future. So having the automated environment, the machines can communicate between themselves, and if certain quality aspects run out of a certain window, then the machine automatically changes itself due to the measuring results which are done during the manufacturing process. So it's really state-of-the-art manufacturing setup, and the whole logistics system, not the whole, but the majority of the logistics system for smaller parts is done automatically by so-called AGVs, automated guided vehicles. So we can run round the clock, during the night, over the weekends in this highly automated environment. Yeah, maybe in addition to that, it's worth to mention that especially our industry is focusing on clear carbon emission goals. We have clear goals by 2033 and the zero carbon goal by 2045, which we think it's realistic to achieve. As of today already, we are completely self-sufficient for around about 30% of our own electricity need. We use, wherever we can, recycling processes to reuse all these liquids and all these materials which are necessary for the machining industry. And of course, we do have all necessary certificates which you need to provide the worldwide automotive industry at highest standards. The key financials, if we compare the year 2022 to 2023, we had a very good year last year by a clear top line growth on every line item, EBITDA, EBIT, earnings after tax. We had a steep increase in cash flow from operations. We reduced the net financial debt, and also the balance sheet total equity ratio was increasing. So it was a real good year 2023. So the pendulum after the COVID crisis and the supplier chain crisis came back, and was really a successful year. What we faced this year is that we had the major impact of a strategic decision. We sold a segment of our business, the ultrasonic welding segment. It's a machine building segment, by 51% to a strategic partner, to the Schunk Sonosystems Group. And therefore, as of mid of the year, this part of the business was deconsolidated. So we changed our consolidation system and are focusing now on what I presented a couple of pages before, on the X-Tech segment of our business. You can see the almost halving of the number of full-time employees. We had, in addition to the strategic move, we had since April a quite significant reduction of orders from the worldwide truck industry. It's due to certain crisis effects, but also due to the reaction of having too many warehouse and too many stock all over the value chain in the truck industry. And therefore, we had a weak third and a weak fourth quarter. But we have seen already that the order entries for next year are increasing again, and we will come back to normal levels, minimum at the level of the year 2022, where we had around 150 million euros in turnover. So the year 24 is a hybrid. So the first half of the year is still with two business segments, MS X-Tech and ultrasonic. And the second half of the year is pure MS X-Tech, but on a lower level than last year due to the crisis in the truck industry. What is important to know as of end of September is that our balance sheet total still has two parts here on the top of the left column, real estate property and now the minority investments into ultrasonic and another electric motor company, which is defined as non-strategic assets, which is supposed to be sold over the next 2 to 3 years, thereby significantly further reducing balance sheet total. And of course, you can see it on the right side, we already reduced bank liabilities significantly due to the sale of MS Ultrasonic majority, but also the remaining debt, being a bond, being bank liabilities and some finance lease, will reduce significantly over the next years. The minority investments, as I mentioned, are basically the 49% stake in MS Ultrasonic Technology Group, now part of Schunk Sonosystems, specialized on machine building for the passenger car industry, around about 70 million euros in turnover and 400 employees, nicely profitable. And a smaller investment which we have in a group which builds electrical motors, where we have a remaining stake of 15%, which is supposed to be sold over the next 2 to 3 years as well. On the real estate side, it's two quite large, one large and one medium-sized property, one in the US and one in Germany. Both are rented to third-party users and are in the process of being sold. There is no debt attached to these two assets. The Weberville asset has a market value of around about 13 million of US dollars, and the market value of Zittau is around 2 million of euros. So as soon as we are able to sell these items, we will have the significant effect on the cash side and on our balance sheet. What is the history of Ixtec and what is the future? This is the sales development since 2020. We steeply grew up to 170 million of euros in the last year. Then we had the drop due to the crisis this year to around about 140 million of euro. And we are quite cautious in quantifying the next couple of years. These columns are attached or are calculated only by booked business. So there is only existing orders, existing clients, prices which we know, multiplied for the next year. So new business as a result of acquisition activities will be on top of what you can see here. The profitability, especially the EBITDA, had a drop this year, which is logical as a logical consequence of the drop in volume. However, it will increase next year and the coming years even more than we had in the past because of our heavy CapEx program. We have automated, as you have seen, significantly. If you add up the CapEx volume of the past years, we come up with a sum of around 60 million of euros in the Trossingen site. And what you always can see is that the CapEx now basically is done. So we have a series of years ahead of us with limited or even no CapEx requirements anymore. The capacity which is installed is able to digest 200 million of euros in turnover, being machine capacity as well as capacity in square meters. Yeah, let me end my presentation. A couple of words about the share, MS shares. We do have 30 million of shares as a stock capital, and the shareholdings are distributed among the main shareholdings, among our supervisory board and us as part of board managers. Armin Distel, my colleague, and myself have the voting rights of MS Proactive. We own 10% of the shares. Our supervisory board, Reto Garzetti, owns 15%, his brother 3%, Kreissparkasse Biberach more than 5%, and a free float of 52% in the market. Final chart, our bond, which we have issued, which will terminate in October 2027, which is a quite stable and important instrument to us. We financed around about 8.3 million of euros with a yield of 6.25%. There is an interesting mechanism because the sales funds out of the sale of the real estate asset in the US, Weberville, is reserved for repaying this bond. It's not a collateral in terms of strong collateral, but it's a mechanism which we have established for this bond. Yeah, thank you very much for your attention, and I'm happy to answer all questions which might come up.
Thank you very much. Yes, the audience is welcome to post questions through the chat or the Q&A function. And yes, as I just said, I already have a question regarding M&A. Do you see potentials for M&A? Could you grow now that you diversified your business more?
The diversification in the business will be especially for other industries. So we are talking about the medical industry. We are talking about maybe aerospace a little bit, depending on the prerequisites which are to be shown there. And what we could think of is maybe a smaller company focusing on smaller lot sizes than we are doing, and maybe doing also some prototypes, prototype parts, which is not part of our, let's say, industrial setup with 180 machines. However, the focus will be on organic growth, as we did now with a step into the US with our new company there in North Carolina. We keep eyes open for potential smaller M&A opportunities. Yes.
And is there a share buyback program planned based on the current share price?
Yeah, the current share price is a disaster. Maybe it's not only affecting us as a small cap or micro cap, but also other ones. In addition to that, we still have this automotive flavor, and we know that automotive is not really interesting to certain investors. The answer is yes. We are discussing it with our supervisory board because it should be a significant positive sign if we start a buyback program. We will discuss it in December and maybe kick it off by the end of the year, beginning of next year.
And could you talk a bit about the long-term EBIT margins that are the goals for the company?
Yes, EBIT and EBITDA. For us, more important is the EBITDA level. We have to reach, and we will reach with all this automation, which we have done, the 10% EBITDA level latest in the year 2026. And the EBIT level should be minimum 5%. Minimum 5%. And depending a little bit on the product mix and the way how we depreciate the hardware which we acquired over the past 2 years. But EBITDA, again, is the most important key figure to us, and the 10% is to be reached as soon as possible.
Okay. And what kind of dividend strategy do you have in place?
Yeah, that's a good question because it's really time after several years of growth and capex. It's now the time to focus on, let's say, cash back to the company and cash back to at the end to shareholders. Since this year was a bit difficult in the second half of the year, and we see now the ramping up again next year. Maybe the year 2026 is the right year to start with dividends. It can be triggered a bit earlier by successful sale of either real estate property or minority investments in our business, or both. So there are some, let's say, extraordinary triggers which might put us into a position to pay dividends earlier. But we plan to enter into a steady dividend policy from the year 2026 on. 2026 is the reason that behind is that we have a financing from Deutsche KfW, Kreditanstalt für Wiederaufbau, which ends in 2026. And as long as we have this financing, which was a COVID instrument in 2020, we are formally not allowed to pay dividends. However, we can ask for, and towards the end of 2026, we have paid back significantly already, so that we think that we will have a positive confirmation if we want to pay dividends.
And you are heavily involved in the automotive industry, so maybe you can share some insights. How do you see a possible recovery of the whole sector?
Yeah. Let me anticipate that we are focusing on the truck business, and there only on the heavy truck segment. Yeah, not light commercial vehicles, not medium commercial vehicles, it's heavy trucks. So taking a look at this industry, even though our main customers are presenting some pure electric vehicles in the heavy truck range, like a e-Actros from Mercedes-Benz, for example, we still do not see a significant percentage of new vehicles purely electric due to several reasons, especially weight reasons and the charging quick charging opportunities all along the motorways. We think that, as I've shown in my presentation, the combustion engine will have a significant role, but not only with diesel, but with further elements and up to a pure H2 combustion engine, which is able to handle these heavy weights on long distances. We totally agree that a certain part of the traffic and the commercial traffic, especially the famous last mile in the inner cities, will become electric or hybrid. But again, the heavy truck, we see it a little bit different due to technical reasons. The passenger car industry is quite interesting, is becoming more interesting to us because due to the variety of new vehicles with E and hybrid drives, the annual lot sizes of parts for these kind of cars very much fit to the annual lot sizes we are used to manufacture in the truck industry. So we will become more attractive as a niche player, as a supplier for certain parts in this variety of new drive systems with our flexible manufacturing. So we see chances, interesting chances for us. In fact, we are delivering certain parts, for example, for the car Rivian. We are delivering for the Jaguar I-Pace. We are delivering the housing for the hybrid drive for the whole Volkswagen Group. Audi Q5, Audi Q7 is using our machine parts for housings. So it's interesting. It's interesting.
And how do you envision the competitive environment evolving? And what are the key opportunities do you see for MS Industrie to differentiate itself from the others?
Yeah. Well, the key elements are really the level of automation which we have reached over the past 3 years to become less dependent on personal cost. Because we are sitting here in Europe, we are sitting in Germany, we have a certain level of personal cost, which is okay, but we have to take a careful look at it. On the energy electrical cost side, we are positioned quite well with our photovoltaic systems. So at the end, we are very close to the customers in Europe. That's okay. And the automation, as I said, is one of the USPs. And in addition, we have to 90% of our product volume of our sales, we are a single source partner. So there's no other supplier beside us to serve this certain product. Once you get a product for the truck industry, you normally don't lose it over the whole life cycle, which is during 30 years, 40 years, 45 years of certain drives. What is happening in the truck industry is that the existing motor platforms for Daimler platform and Traton platform are highly developed already. They are also able to do the Euro 7 norm, Abgas norm, the Euro 7 pollution requirement. And we don't see new competitors to enter into this business. We don't see it because it's heavy capex, as I have said. If you would like to invest newly in all this setup, it's a huge step. It's a huge step. For these 5 truck premium companies, which I have showed, at the end, the two main suppliers is Gnuti Carlo Group and ourselves. So, we both share the variety of these 5 premium truck companies. So we feel quite protected in this industry. However, we have to digest the volatility as we have to digest it this year. But again, the parts, once you have the parts, you never lose them.
Excellent. So we just have 30 seconds left. Maybe you can wrap it up and give some future shareholders or existing ones the idea why they should invest now in MS Industrie.
Yeah, well, I think just from a top-down perspective, the stock price is really low. We have 62 million euros in equity and 30 million euros in shares. So we are trading below, significantly below book value. That's one idea. The second one is with our orders on hand and our total contract volume, which we have with our customers, which is lasting until 2030, 2031, plus extension options, is more than 1 billion euros. So we have a visibility down the road for the next year, which is, I think, really interesting as a base of the business. And the third element is we still own certain non-strategic assets, and we are adding up real estate and minority investments up to 25, 26, 27 million euros. Once we have sold these assets, we are in a new world in terms of net debt and in a new world in terms of dividend policy.
Dr. Andreas Aufschneider, excellent closing words. Thank you so much.
Thank you very much. Bye-bye.